Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Friday, May 13th. Friday the 13th. Kind of ominous, huh? Don't forget to run your player at 1.5x. Let's take a quick look at futures. Bitcoin, nice reprieve this morning, up 5.5%. Oil's up 1.6%. Large caps and small caps 1%. NASDAQ 1.6%. Macro front, import-export prices today. Consumer sentiment. We got the rig count in the afternoon. Don't forget we've got a weekly OPEX today. And then we've got the bigger monthly MAOX option expiration next Friday. You know, historically speaking, option expiration week is generally bullish, but hey, you never know for sure. I don't know if that's anything to specifically build a whole thesis around. So we'll have to see what happens over the weekend, and in the next week. Want to go over a few general trading things before we dive into the charts. There wasn't a lot of technical changes yesterday. A few I want to point out, but I want to go over a couple of other things first. Of course, we've got the Luna crypto coin blow up yesterday, where the whole ecosystem imploded. The Luna coin went from 110 to 0 in just a couple of days. The stable coin associated with the Luna ecosystem, supposed to be pegged at $1, went to 0. So anybody in Luna, basically was zeroed out. Starting to get reports of suicides and stuff related to that. Just a friendly comment about that. Never let yourself get into that kind of a state. There's always somebody. There's a healthcare professional, there's family member, there's me, there's other trading buddies. It's never that bad. It seems that bad, but it's really never that bad. I've been zeroed out a couple of times in my life, no doubt. Very painful. Back in '92, Hurricane Andrew, zeroed out. Nothing. No house, no business. Basically got out with our lives, which was great, because if you got your life, you can rebuild. If you don't got your life, you leave your loved ones, your family, everybody behind, and it doesn't really solve anything. In fact, it leaves them in a bigger bind. So it's never that bad. But here's another point. Never let in your trading life, and really in your regular life as well, do your best not to put yourself in the situation where one guy, one thing, one stock can take you out. Right? So the people that are on suicide watch and others that aren't to that extent but wiped out financially had all their eggs in Luna. And that's easy to do when it goes up every day. Free money. I guess this stable coin was paying 20% interest for people that wanted to just simply park money in there. I saw tweets about, I can get a free house because if I put $200,000 in the stable coin at 20% interest, it basically makes my mortgage payment at 3% interest or whatever it was, and so I get a free house. Well, there's nothing free. 20% interest comes with risk, and if you got all your assets in that Ponzi scheme or whatever, even if it was well intended, and it collapses, then you got to take a zero. And if you got everything in there, then you're really hurt. Again, it happened to me back in the day. Gilead was the stock du jour, maybe like Nvidia or one of these other ones are now, going up every day, every day, every day. You know, I built a mountainous position way, way outside what I should have been doing. And then one day, before the market opened, CVS announced that it wasn't going to carry Gilead drugs in its formulary, and it was down 20% in 15 seconds. And if you know anything about options, basically whatever you're holding goes to zero, because after that shock wave, it did ultimately come back to a certain degree, you know, a reflex kind of rally, but it took months and months for that to happen. And of course, all your options expire while that's happening. So thank God I didn't have every penny in it, but it definitely hurt. So moving on. Yesterday, just sheer volatility cut me up pretty bad. I just got whipsawed. You know, I thought that rip was going to break us out, so I closed out, you know, some shorts, and then of course it went back the other way, and just one of those classic days, kind of got off on the wrong foot. In my experience, once you get off on the wrong foot, it's hard to get back in sync with the market. You're always a half step behind. And so, you know, tough day at the office. I'm not complaining. I'm just sharing with you. So I've taken down my exposure a lot. You know, if there's a massive rug pull this afternoon into Friday, of course, I'll try to catch it, but I don't have a lot of longer term short duration on anymore. And I want to remind you of the great Jesse Livermore quote: "The first eighth and the last eighth are the most expensive eighths in the world." And to make sense of that, you have to understand that stocks used to be quoted in, you know, dollars and eighths. So, you know, 10 and an eighth instead of 10.125 before it got digitized. So what he's talking about there is, you know, if you're in a trend, trying to hold on to the very end to get that last eighth of that trend, or if you're in a downtrend, trying to get the last, you know, the last flush, those are very expensive. Why? Because there's this inherent instinct, I think, within people to try to be a hero, whether that's linked to greed. I think it's both. I think it's trying to be a hero, trying to be the one to say you called the bottom on a reversal, or everybody knew that the rubber band was going to break and it was going to drop 15% in an afternoon, and you're loaded to the gills short because you knew it was going to happen, and then it happened, and then you're rich and you're a hero, and you can tell everybody all about it on Twitter. So I was thinking about that. Be careful. Real tough to nail the bottom. Real tough to nail the top. And I kind of came to the conclusion yesterday that, yes, the rubber band can break, but it's probably not worth chancing a rip the other way, being loaded with shorts. I decided to try and, you know, still be in the game. Don't get me wrong, but I had too much exposure yesterday. Just as simple as that. And I think it's one thing if you have, like, if you're experienced with futures, or you're just trading the indexes or something, and you've got a large position, you can make one click and you're out. So if you had a large NQ position or a large SPY position, whatever you're trading, and you see that it's starting to turn or at a place where you can that you want to get out, you just click sell, right? One move. But if you got 15 positions, across a variety of stocks and indexes, when that thing starts to rip, you can't even hardly get to them fast enough, right? You close one, you go back to the chart, see what's happening. Oh my God, it's still going. Then you go back and close a couple more. So you make 5 of those round trips. It takes a few minutes, and then of course if it's moving fast enough, you'll lose a lot of money. So I think that one about the first eighth and the last eighth being most expensive eighths in the world kind of applies here. Probably most of the meat is off the bone of the short trade. And that's not to say, oh my God, it's time to get long, because, we're still, there hasn't been that much evidence yet that there is a bottom. So we're still in limbo land as far as the rubber band could easily break and we, flush down, or we can start making the turn in what I believe would be, a bear market rally. So let's get into the charts. One breaking news thing. Elon is out this morning saying, my deal with Twitter is on hold until we can prove that less than 5% of the activity is robots and algos. Supposedly that's not new news, but Twitter's down 20% on that. So more games, it sounds like, whether he's fishing for an out or just trying to stir the pot. I have no idea. That's exactly the kind of stock that I try to avoid, a Twitter where one tweet will wipe you out. I'm sure there's a lot of people that were in that, and so now they're going to wake up to minus 20%. So that's the way it goes. So let's dive into the chart. Here's our put to call extremometer. On Wednesday we had a relatively bunch of call buying that rotated back to put buying yesterday. We were down at 0.81, down in this area. So still, aside from this 1 or 2 days, people buying puts, I don't really think it's at extreme or clustered enough to say that's a bottom. But interesting that people were again buying protection. A little bit of a bounce in the NASDAQ oscillator. We went from minus 69 to minus 50, still stretched to the downside, potentially on a bounce back up, but very hard to tell at this level. Same thing with the NYMO. What were we at? Minus 66 to minus 53. So marginal bounce, but still really can go either way. VIX again did nothing. Had a early morning ramp up into this 35 area and just rolled over at the end of the day. VIX has been interesting and helpful to watch, but frustrating at the same time, just not reacting the way most people, including myself, would expect it to react with, a climb higher. There's just really no fear in the market, at least measured by the VIX. So Luna yesterday, imploded. We had the big dip down to 26,000. Now this morning we are back up again. So we'll see how high Bitcoin can go. I still think it's a nice proxy for risk on, risk off, and overall liquidity in the market. So even if you're not trading it, I think it's going to be right along with the VIX, a good benchmark thing. If you see Bitcoin doing a moonshot, I'd almost bet that NASDAQ would be boldly green in that situation, and you know, we have that this morning, so we'll see if it sticks. Let's dive in on SPY. Mostly an unchanged day, but with a lot of volatility. We took a deep look down, and then, you know, rallied, finished somewhere in the middle. I think you can key off of 395 on the daily chart, and if today we get a nice green candle, we could get that 3 candle reversal pattern. You can, I know at one point I sent out a candlestick cheat sheet, but a 3 candle reversal is, you know, red, red, green, and with the green candle taking out the body of the first red candle. So you got that 1, 2, 3 type move. And then what you can do is shoot against 395. That would be a pretty tight stop. And then overhead, we've got the psychological 400 level. Really not a technical level, because we really didn't spend a lot of time there. I think 405 is a much more important level once you get above 395. Of course, you can use 400 as a midway point. We're still within the falling wedges we've been talking about for the last couple of days. You can see that we had a strong close that final hour on SPY that brought us up to 392.50. I think we're in the let me take a quick look. Yeah, we're trading about 398 at the moment, so we're right up here. Don't forget, on the open, we will have that 1% gap below that they may try to flash fill. Always be aware of that. Or just, I mean, end up fading it the whole day. Who knows? But up nicely in the pre-market. Then you've got this 400 level. You know, we're trading right in below. And we've got 405, and then we've got a big gap, and then we've got 411. So we'll see today whether the bulls can finally assert themselves and start a bounce process. QQQ, this 3-bar reversal setup again. We've got a downtrend line coming in here. Our big level remains this 317 to 330, 317.35 to 322 area. But that's, $27 away. So that's something you may want to, you certainly wouldn't want to sit out short, that's for sure. Whether you can game that bounce or not will depend on how active you want to try and be. But here on the daily chart, you've got a nice level at 290 if you wanted to shoot against that. Or, since we're up in the pre-market, we've got a level here at 298, an important level at 305. Just shy of 305. Right here where we had a cluster of 3 candles get rejected right at that level. Then above that, we can challenge 310 and then right on up the line. So here it is on the I know this is compressed and tight, but you can see that we're inside this wedge. We've got a level here at 292.50, and then a bigger level up towards 297.50. I think we're actually a little bit above that now. One level to really keep focused on today is 305. Why? That was the level that caused all these rejects right back here, and also the top of the downtrend channel. So you break out of the wedge, you break out of lateral and downtrend resistance at 305. That could certainly give the index some legs to get up to 317.50 and then kind of test that level. IWM made a valiant attempt to come down here and reach the top of the gap. Really did not do that. I think you can use this 175 area as a breakout level. I think we're trading well, we'll have to see wherever we open. It's regardless where it's trading now. Just know that we closed at 172.60, and a break above 175 would open the door to 180, and then we've got this downtrend line where we could ultimately have a breakdown, back test, and then fail in the future. No doubt about it, though, IWM is still in full bear mode on the bigger picture, as are all the charts. They are all bearish. Nothing out there looks bullish at this point as far as the indexes go. So keep that as a framework. What we're discussing now is a bear market kickback rally from oversold conditions. Nothing more. So have that level in focus. And then here's your steep falling wedge with a little granularity of where this downtrend line comes in, where the overhead gaps are. This 176 appears to be important. And then on the downtrend line, you probably get a little hesitation here at 178. But as of the close last night, we were still inside of this wedge. So, Facebook, another kind of frustrating trade. You know, we had, well, just speaking for myself, you know, was short, and then this level here caused a big bounce. They faded it, came right back down to the same level, bounced back up again, up a little bit in the pre-market. So was hoping for, you know, a flush fill, but it doesn't look like that's going to happen. I would think the go, no go line is either here at 192.50 or 195, depending on, you know, how tight you want to try and do it. So that's Facebook. I think this will eventually fill, but when it does that, nobody quite knows. Apple, again, outperforming to the downside, down 2.7% when the Qs were hardly down at all. Put in this big doji candle with highs up around 146 and lows in the 138s. So that was a real interesting candle. I think on a recapture of 145, I think you can shoot against that. That's the largest volume over price bar that we've got. And I think a lot of what Apple does will be kind of linked to the market. If we're red today, Apple will probably, again, outperform to the downside, you know, showing that the selling isn't done yet. We did kind of tag this level here. So this 138.50-ish level, you break that, then you're coming back back into this area here. But this doji indicates indecision. The bulls were not ready to take it, and the bears could not maintain the power. So it closed almost exactly where it opened. So I think you got some clear levels there on Apple. Tesla came down, tested the February lows at 700 and held. And now on that Elon news, Twitter is down 20% and Tesla is up 5% in the pre-market. So maybe the pressure is off on the selling if everyone feels that the Twitter deal is going to fall apart. There won't be that margin call selling type activity out there in Tesla, so we'll have to wait and see. But you've got a great line here at 700. Microsoft outperformed to the downside as well at minus 2%. You've got a really nice line here at 255, and then $5 increments above for objectives on a long trade. As long as it holds 255, that's near-term bullish. You recapture 260, that's a line, 265 and 270. It just turned out that way. Really, the thing that would get it going is a break above 270. Why? Support, support, support is now resistance. So we saw that come into play on these couple of bars here where it could not get back above 270. So we break back above 270, then you would have some real room to run now. But here short term, if you're looking for a bounce, you're looking for $15 back to 270. Amazon is a nice setup. Why? Nice, well-defined downtrend channel with bullish divergence on momentum and RSI. If you get a breakout above the downtrend and you get a breakout above 2200, I think you could see 2400 real quick. So that might be, this is Friday, that might be a good lottery play if something kind of percolates and gets going. You might want to set yourself an alarm at, say, 2150 for a breakout above the downtrend line, and then possibly an alarm at 2200, because you get above 2200, you move into a void. And I think if things get bullish this afternoon, you could see a run up to 2400, which you can tell was a place on the chart where price had seen prior support. So I think that's an interesting setup. Same thing on Google. Essentially, got a big downtrend line, well defined. We talked about this trading range. We talked about this support level at 2250. We undercut that yesterday, but came right back up to it. So just for a near-term deal, a break above 2250 puts it back in this range, which would target this 2320 area, and then 2375 type area. So, that in and of itself would be a really nice day trade. And if you got this breakout on a 60-minute chart, it could portend an even higher run. What you could do there is put your Fibonacci tool from high to low, and then just see where those 38, 50, and 618 retracement levels are, and see where they line up with technical resistance. I can almost see it here. that this would be a spot where I would expect one of those fib retracement levels to lie, because it's right in here with a lot of other trading activity. Netflix got a recovery above this 172.50 area. I think that's a good line to shoot against. If things get bold and bubbly, you could get a move back up here to 187.50 and possibly even higher up near 200. SMH, falling wedge. We talked about the importance of 223. Lines up really, really well with this wedge, with everything that's going on. We took a look down to the bottom yesterday, came right back up to the top. Oh, actually, that's 221. 223 is on the daily chart. You can mark that, but it's just right up here. But on this chart, a breakout above this wedge, say 222 or so, would open the door up towards 228 and then 233. Very nice, well-defined, bullish falling wedge right there. Quickly through ARC, dash for trash day yesterday, where either a lot of short covering or people, throwing darts at the worst of the worst. Technically, not making a comment on anything other than that, but a lot of these names up 5%. We had ARC F up 5%, 5% for G. I would be watching this 31 area on ARC G for a recapture. ARC K, I'd be watching 40. I think we're above that this morning, given that Tesla is up 5% in the pre-market. I think 40 is a good trading level, good pivot point on ARC K. ARC W, I think 52.50 is a good pivot point for that if you're trading that. So just recapping, don't let yourself be vulnerable to get wiped out by a single stock, coin, anything in your life. Never bet the farm on one thing happening. Watch that volatility. It can get the best of us. It got me yesterday. And remember, your goal is not to pick the bottom or the top. It's to participate in a worthwhile trend, whether that's a bear market rally or a bull market dip or a bull market or a bear market longer term trend, because you make your money in the trends. You don't make your money picking tops and bottoms. And keep that Livermore axiom front and center on your mind. Make it part of your discipline, kind of thing. I think it'll steer you in the right direction, or at the very least keep you out of trouble. So I hope you enjoyed the video. Hope you have a good day of trading. Hope you wrap up the week strong. And if I don't talk to you later in the day, make sure you feed the brain over the weekend, recharge the batteries, turn off the screen for a while, step away, and be fresh next week. If you're new to the channel, thank you so much for spending time with me. You can tell that it's a technically driven channel with some trading psychology mixed in. If that appeals to you, please join us. Hit the subscribe button, the alarm bell. Jump over in the show notes for a link to the blog site where you can drop in your email and get all the content morning, noon, or night right in your email box. We'd love to have you. And you'll also get an invite to our trading room. Love to have you there as well. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.